Ladies and gentlemen of the crypto space, 11 Wednesday, September 4th at 11:30 a.m. What are you guys doing here? Are you looking for a conversation? Are you looking for something new and exciting? Something that's going to go to the moon? I have no idea what the hell is going to go to the moon. No one does, unless new and shiny has a lot of shills on the social media. New and shiny. It's something I think about often. It's a thought experiment. The new and shiny. If you could get in early, if you could buy a large supply at an opportune time, drive you nuts. Will the new and shiny do what the old and established won't do? The choices are endless. How do you find the new and shiny? Did someone shill it? Was it told to you, offered to you, like a little insider trading information on public social media, for instance? Well, that seems to be what everyone thinks, and I myself literally scour the social media for such information, or did much more so in the past. But my mindset is very different nowadays, as everyone could probably deduce by potentially looking at older streams years back versus the content we discuss nowadays. Don't I'm not fond of new and shiny. I'm not fond of I gotta be in early. I gotta be in quick. I am not interested in that fast-paced adrenaline anymore. I want to be calm, cool, and collected. I want to have that emotional stability. I want to be relaxed. I want to take my time to make choices and decisions that happen to be quite meaningful. Now, is it better? Better is such a subjective word. Is it better to be new and shiny? Is it better to be old and established? Better. Oh, semantics will drive you nuts. Trying to make a determination of what kind of a behavior you should engage in to try and achieve what you want to achieve. Very philosophical type of conversation to open the stream today, but my general sentiment is I don't give a shit about new and shiny. I'm much more, and it's probably a result of the climate of the market, malinvestment being cured and all. We want proof. We want evidence. We want confluence. Maybe that's what a bear market is really designed to teach folks, where capital is scarce and choices and decisions need to be taken as a significant responsibility. Due diligence and care, and take your time and make good choices to protect your capital. And then I think that perspective will serve you much better in a raging inferno of a bull market than the frantic, adrenaline filled, I have no idea what the hell is going on type of mentality. Maybe that's just experience talking, having been there, done that with the adrenaline mode versus, all right, I don't like that. I didn't like that, and I don't want that ever again. I want something I want something what do I tell you guys? I want to sit in the backyard or on the beach and click a button. That's not adrenaline. That's boring AF. But I would like to think that that's a nice achievable goal. It should be decently reasonable considering the technology that we understand and the opportunities that we've discussed over the years. So that is something that I continue to think is the best approach to capital management going forward. I mean, literally, if you look at my older streams compared to now, it's who the fuck is this guy? The fuck is this? It's just a completely different person. But I guess that's the whole point. The point is we change over time and we learn from mistakes, we grow from successes, and we iterate, we evolve into something similar yet different. So up on the screen is liquidity. It's basically stable coins. It's dollars because it's all about the dollars. It really is. Now, very notably, We significantly recovered from the bottom in 2023, and we've hit a plateau for the last couple of months. But this is a hell of a point: $169 billion across the crypto space, with basically the top in March of 22, 187. We basically recovered the liquidity depth that we had at the top of the market. I mean, the top of the market really was at the end of 21, but stables continued to ramp up into 2022. So the liquidity is there. So what does that mean? That basically means we're just waiting for the spark. And the spark is volatility. The spark is sort of FOMO and people being kicked into gear to engage with markets for reasons of virality, trends, where a narrative starts to propagate through society. That the equity markets are collapsing. The crypto market's doing well. It's outperforming. Capital rotation from underperformance to outperformance. The commodity markets are outperforming. Right. Gold, silver, maybe futures contracts on oil or or pork for all I care. Maybe they're outperforming. Or maybe a big rotation into Dow Jones Industrials as compared to Nasdaq and Tech, which I would grossly define as overpriced pig shit, fueled by yen carry trade and cheap debt that's not necessarily available in the US, but certainly has remained available outside of the US. And that is by definition what a carry trade is. If you can borrow at a quarter of a percent in Japan and buy the NASDAQ and you're getting 10, 15% or whatever the rips are in NVIDIA, uh, that's a carry trade. Then you pay back the relatively cheap yen as the dollar continues to appreciate and the yen continued to depreciate, which is no longer the case. Uh, as it's indication of a reversal, which implies a lot of that carry trade unwinds. That's a very interesting chart. Breakdown from trend, retest, or not even a decent retest, failed. There's 26 days left of the month, but unless it gets up to trend, that trend's broken, and there you go. There's the cascade of narrative that's viral because everyone's looking at this data, and then you get the reversal, and you get the trend down, and then you get capitulation. And we're going to see a massive capital rotation, and it's coming soon. Who mentioned rate cuts, Raul? How many rate cuts do you think before we start seeing more real estate inventory come on sale? Okay, so don't think about rate cuts on a particular market. The best thing to understand rate cuts is that when they start cutting rates, shit's changing. So markets get addicted to directionality. If the rates are going up and the rates are flat in Japan, which they've been all throughout, you know, 20 to 24 basically before their first hike, um, the market got accustomed to that and they're like, all right, we're not going to borrow in the US because the rates are getting more expensive and we're going to start borrowing in Japan. And there's your carry trade. So that blows out the carry trade to the upside. So when they start cutting rates, what that basically does is invalidate investments. Investments partly being carry trades, of which everything's a carry trade, including the dollar. It's literally the king of carry trades. And it starts to force persons with capital, investors, to reevaluate their current capital management positioning and adjust into new strategy, into new allocations, new destinations for their capital. So it's gonna come. It's probably starting this month, and that's when things start rolling over. Maybe. What does rolling over mean? Because there isn't just a market. Oh, there's going to be a crash. The market's going to roll over. Which market? The biggest thing that the general public doesn't understand that all of you do because I tell you a crash isn't a crash. It's a significant reallocation of capital, just as I said, as investors start to re-entertain what the hell is a good investment and what isn't, based on interest rate spreads, maybe geopolitical considerations, or what have you. maybe geographic considerations, maybe deglobalization considerations, and where is manufacturing most optimal? Uh, might become more optimal in the U.S. Might have more exports out of the U.S. over the next decade as compared to just imports from uh, Asian, Southeast Asian countries. And that trend may change because of the structure of the system. And it looks like the structure of the system is remarkably changing. So that has big implications for where capital goes. That is a trend break violation in almost any inspection. Look at this, there's no way to not be a trend violation. We literally smacked into a moving average for the first time ever. That's how yearly charts are. Yearly charts are a funny kind of chart. It's the first time we're seeing the 100 on the since 2011, and everything up until then just building to a capacity for this data set to be present in chart form. Just fascinating to see how price action evolves over time, especially on the high time frame charts. I think this is so constructive in understanding what plays out in the system, especially as they start cutting rates. This is probably the best expression of what I mean when it's going to start to get weird, because we all know it's getting weird, but it's going to get weirder. So this was a world 81 until 20. This was a completely different world 48 until 81. A world, as in what you perceive as normal, the types of jobs that work, the types of things you go to school for, the types of things that are useful, meaningful, and that it's all going to change. That's really the most significant takeaway from such charts, and certainly you see that in the dollar as well. The dollar starts trending with lower high, lower low into 66 in 2034. It's a whole other world, and you've never seen that world. If you're, unless you were born in, unless you were, you would have to have been of competence. So you'd probably be 30 years old in 2000. So you're born in 1970. If you're born in 1970 and you've studied markets, and then you recall 2000 to 2008, that was a particular type of world. Was a bear market for the dollar, and that produced particular normalities that people got accustomed to. I was young. I was literally in college, which is naive. You know nothing of the world, and until especially until you get older and have kids. So there was no way I could really recall that kind of world from the context and perspective that I have now. But that is basically where we're at. We're at an inflection point with regard to the structure of the system. So Raul, when rate cuts start, don't think of real estate inventory. It's already crashing in many markets. There's going to be so what does many markets mean? There's endless markets. Every county, so every state has how many counties? Then you have towns, and then you can have literally an isolated neighborhood in a particular town that has basically no depreciation. And the 2 miles down the road, home prices are down 50%. That's basically what's occurring in Florida with the condos and what do they call them? Uh, they call them assessments. Special assessments. The condos are rolling over. You see $1 million condos go for 400,000, $500,000 because when you buy it, you probably owe like $200,000 worth of assessment, and instead of a $500 a month HOA, you got to pay a $2,500 a month HOA. So a whole lot of weird structural changes are playing out, especially in real estate. Um, I don't think rate cuts significantly increase inventory in the market the way people think they would. I mean, you got to think of the rationale in selling your home. Everything is still significantly appreciated. So now instead of you're able to save $1,000 a month from a mortgage standpoint. I get it. In hindsight, you'll have to see what plays out. And I'm no real estate guy in that regard, but I think there's still quite a scarcity of of, of of homes. So I think prices structurally remain elevated. I don't think we get that kind of liquidation cascade that we did back in '08. Just too many folks have equity in their home. I've seen charts that I recall vaguely where the vast majority of people literally just own their home, like no mortgage, just owning it. So they don't give a shit. They don't care what the interest rate is with regard to their home. And there's also another majority or another large population that has dirt cheap interest rates, 2%, 2.25%, 2.5. They don't give a shit. They're not going to buy a more expensive home with 5% interest rates. No, they don't care. So I think the prices remain relatively elevated. I don't think anyone cares. So I think the best answer is something I mentioned this morning. Was it a post this morning? Geo, geographic arbitrage. I mentioned something with regard to the Constitution and states' rights and federalism. State migration here in the US is a whole country. You can migrate to a state that has relatively cheap real estate. Like, for instance, New York and California. Who the fuck wants to live there unless you're making three, $400,000 a year? Oh my God, there's literally no reason to live there. So, I remember when I was young. What's the perspective? What's the story? The story is you're living as a child and you're growing up and it's normal, meaning your environment is normal. Where you look for a job is normal. And it's very scary to think about, migration. I grew up in New York. I lived on Long Island. I worked in New York City, commuted 3.5 hours a day, worked on Long Island as well. And then I was like, what the fuck am I doing in New York? And I left. And I took a job in Orlando for 40% pay cut. And this was back in what, 17? 2017, 2018. That was the best decision I ever made. A 40% pay cut. And ever since then I've been a little bit salty about New York. They say if you can make it in New York, you can make it anywhere. And it's probably even more so the case for California. Now I understand California's got some beautiful weather along the coast. Pay a premium for that weather and you're going to struggle and you're going to be impoverished relatively. Same for New York. New York is very nice with the change of seasons. North Shore Long Island is insane. It's just beautiful. Just the oaks and the trees and just beautiful properties. A significant premium. Everything costs so much. So arbitrage, just like you get an interest rate on Aave versus whatever other protocol, you can get a lower interest rate. You're going to arbitrage it. Just like when you're getting a mortgage, you get three or four bank offers. You go to Rocket, whatever, Quicken Loans, and you get an interest rate. So the arbitrage, you get the best rate possible. Why the hell don't we think of that as normal for our living conditions? Arbitrage. I think that is a very meaningful consideration. Um, Obviously, it gets complicated. A whole lot of complications. I'm not going to digress too much. So, good point, Raul. Sir Joe present. Tapsy, what's up, guys? Greetings, Cap, Gazika, Teddy. What were your main considerations in moving to Florida as opposed to any other southern coastal state? Work. So, back in what, 17, 18, remote work was there, but it wasn't too popular. I mean, it really exploded in like 19, pre-pandemic. Just remote work exploded everywhere. Um, but that's where the theme parks were, and they were doing software. So it's an interesting year for software because everything has changed at warp speed, and I've been here since the beginning. I started my software career basically when Android came out. I've seen the entire evolution of it. At first it was, full time, and it wasn't contractors. It was agencies. The agencies were gobbling up resources. And then a couple years in, maybe 2013, 14, these contractors, and literally salaries just bottomed out. And you just started having two, three parties in a contract, and they're charging 150 grand a year for the contract, and the employee, the contractor, is getting 60, 70 grand a year. They get fucked, and that's probably still the case in many regards. But nowadays, everything's changed with AI. But that brings us too far forward. So Teddy's point was moving to Florida. Turns out the theme parks were very into the apps, and it was early. The very few people were using the apps, and mobile food ordering wasn't so popular. But nowadays, that shit is big. But that turned out to be what I built at Universal. You ever go to Universal and they have an Android phone and you order any food, that was originally my code. I wrote the original code implementation for their Android mobile food ordering system. Um, Other southern coastal state. I mean, North Carolina on the coast, stunning, stunning. Um, Anything on the coast. See, the thing is, I don't want to be on the coast. And it turned out that where my wife chose down here in South Florida was very nice because there's a big region of what they call it, storm barriers down in South Florida called the Everglades. So anytime a hurricane comes in from the west, so it loops around and into the Gulf and comes across the island from the west, got a massive storm barrier of just a huge amount of what's called the Everglades. So we're protected from the west, and from the east, there's dozens of miles of of, of state between where we are and the actual beach. So I appreciated that significantly. There's a lot of flooding that occurs in Florida. That was a major consideration, is elevation, and it turns out that this particular region has a decent elevation, and the property itself has elevation. We're not talking about significant elevation. We're probably talking about 6 to 10 feet total elevation between the area's elevation and the property's elevation, which 30, 40 miles from the coast, that's a big deal. You get big, and to top it off, it also has good drainage. So there's a major consideration anytime you're doing anything on the coast. So that was a lot of the decision making that went into being uh, where we're at currently. Anywho, a lot of people don't like the permanently hot weather of Florida. I happen to think it's just lovely. Uh, it's very healthy to sweat, and that is certainly something Florida could always do for you. Anywho, it's a nice topic, not very crypto-centric, but that's what we have to talk about also, because we have to have some context on why the hell we do things in this life. One more thought. Also, real estate center. What do you think about Kamala's plan to get rid of 1031 tax deferral for real estate capital gains? I don't think real estate should be a business. I think Airbnb shouldn't exist. I don't believe in real estate as a business. So, frankly, I find it disturbing the state of our housing markets. Um, I don't like that, which brings in great complexity with, like, you know apartments and condos and co-ops. Um, but we have some interesting tech nowadays, like the concept of a DAO. That's the original concept of like a cooperative. You're pooling your resources, and so you need a property manager. You don't need an owner necessarily, and everyone could own individually. I don't know. I'm not a fan of real estate as a business. Real estate is a very, very personal thing, meaning it's your fucking home, and just the concept of renting and it's just it's disturbing. Because I talk often about the concept of wake up money. and your capacity to be calm, cool, collected when you wake up in the morning, and how you're supposed to do that in a potentially devastating rental situation where it's very expensive. So that's not fair. I don't like real estate as a business at all. I think it's a very structurally bad situation for a country. Um, 1030. Well, I'm giving crap. 1031s. The house trading properties. I think those fuckers should lose everything, in my opinion. Anyone who invests in property. Um, maybe malls and other things are another story. Like commercial property. All right, fine. Commercial property makes sense where you're leasing, net lease. You're leasing to warehouses and Targets, Walmarts, and Walgreens. All right, fine. Maybe that makes sense. Maybe there's your investments. I don't think residential real estate should be an investment. Dan's in the house. You're saying curve. What are you talking about? That shit looks good. That buy back up to 28 cents. Clean up the chart. That's a hell of a bottom formation. Low, low, lower low. But now you have a bit of a floor right around here, 25 cents. I don't know. Too much thought. It looks good. Curve green. Oh, wait, that's what you said. I didn't read what you said. Green and a sea of red, 7%. Oh, it's not too much of a sea of red. Bitcoin's at 58. Hell of a price point. In fact, it literally looks exactly the same as curve. Low, lower, low, low, low. I mean, the whole market has very similar patterns. Low, low, lower, low, low, low. I mean, it's everything is driven by these very homogeneous external forces. Oh, the market's doing good today. All right, everyone's fucking buying across the board. Oh, the market's doing bad today. Everyone's selling across the board. So it's kind of like on, off, on, off. So there's usually a great deal of consistency in market activity. Either everything's green or everything's red. Even Nasdaq's back up to 19,000. That's crazy. Punch below the 100 SMA on the daily. That is a big mean regression. Let's zoom out a little bit and get some sense. Let's get some sense of where we are. Do you see this? Do you see how insane this is from a technical standpoint? We haven't touched the 100 SMA in the NASDAQ since 2009. Haven't touched it. How do you have a healthy market if you don't have a mean regression? So this isn't a market. This is basically a 401k vacuum sucking the money out of people's pockets, piling it into overpriced pig shit. Basically what this index fund is. F, the NAS. Same as the S&P, same as the Russell 2000. It's just index funds. These are just ETFs. These aren't stocks. You're exposed to stocks, but stocks aren't even what people think they are. You're not buying companies. You don't own shit. You have no control, no nothing, no significant voting rights, no revenue, meaningful revenue that's not, please, sir, may I have some more? You don't get shit with your equities. Anywho, enough me complaining about equities. Anything positive to say about data? I think really the stable coins is the takeaway. That is just a wild experience for Tether up at $118 billion. Then if you go back over to DeFi Llama, we're at 169 in total, which is nice to see. If you exclude 169 minus 34, there's a fair amount of billions of dollars of other than PayPal, it's another billion, but there's still a fair amount of billions of dollars worth of synthetic dollar liabilities. And I think that is the biggest business in the world. So that is probably one of the biggest inspections that we can make. It'd be nice to be able to see that in chart form because that is really our domestic crypto credit market is how many synthetic dollars exist circulating through the crypto space. And that tells us whether if it's expanding, there's increased endogenous liquidity, liquidity native created in the crypto space. So I think that'd be a great chart. Maybe I break out some APIs and some Python and I chart that. That might be quite interesting to see. Um, let's take a look at some volumes. Well, negative sum environment, you think? Wow. Ethereum down 20%. Financial activity week over week. Optimism 10%. Phantom's probably, oh shit. Random 10% positive to the upside. Avalanche dying. Arbitrum again hit. Base bleeding out. Everything's bleeding out except Phantom. Go figure. Outperforming on the weekly. What would let's take a peek at net flows. So Ethereum is a marginal negative sum environment. Arbitrum positive sum. All right, $4.6 billion. Arbitrum compared to base 3.37. Marginal positive sum environment as well. Look at those. Arbitrum and base doing very well in the backdrop of mainnet being a little bit negative sum. Albeit mainnet has the majority of liquidity in the entire crypto space, sitting at $82 billion. Optimism, positive sum, $1.352 billion. Very interesting to see. Let's go over to volumes, take a look at DEXs real quick. Mainnet, Uniswap still king. Optimism, Velodrome solidifying a strong lead on Uniswap. Let's take a look at base and see how Arrow's doing. Strong lead. DEX TBL 565 with significantly more volume. So in the 7-day average, go over to Arbitrum. Ramsey's lagging down at 5. Camelot strong. 29 bill cumulative volume. Volume to TBL 0.75. Very interesting. Pancake cranking out 1.88. Dodo at 3.6. So Dodo has made a name for itself on mainnet. They originated in on Binance Smart Chain, I believe. Um, cross chain. It's a cross chain implementation. Yeah, we could take a look at it real quick. Out of left field doesn't mean it's something to invest in, but it's just something at least to understand. So it does provide your cross chain flows. This is just yet another to add to the list of shit that facilitates capital flows cross chain. Let's see what it supports. Chain. Here, Ethereum, Arbitrum, Polygon, BNB, Optimism. All right, so it's a pretty limited list of chains, albeit it does have Linnea, Scroll, Mantle, which is interesting. I'm inclined to think that this is a decent expression of the most meaningful of chains. Food for thought. Linnea, Scroll, Mantle are things that we have looked at of late, and clearly Arbitrum and Optimism. And do they not have base? And base. This literally has the top end of the crypto markets connected. So this is just another means of getting capital cross chain. I'm obviously fond of Stargate, but doesn't mean there's not going to be a lot. There's plenty of others. There's Layer Swap. There's Rubik, and the list goes on and on. But Layer Swap has done well over its existence, and Rubik is just useful as well. Little bit of a premium in the swap fees, but still decent. Um, Anywho, this is just some coding I've been playing around with. You saw that web design I put on X, which was pretty cool. Digression. Time for the captain's famous digression. This is built using React and this tool set called Cursor, which is basically an AI enhanced IDE. Very, very powerful. Probably put together some interesting things. I was thinking the other night to put together something like a trust builder. That'd be pretty interesting. Or maybe some sort of trust tutorials, because I could build stuff that's derived from the work that I've done. That would be that'd be very interesting. I don't know what kind of product. I'm no product designer, but that could potentially be an interesting product. Y'all know I've told everyone what's available on Discord, yet there's no activity on Discord. And with regard to the trust channel, and there's literally no sign up, so it's clearly the general public has no interest whatsoever in optimizing business structure. Wink, wink. Maybe you should. Maybe that is what you're supposed to be doing during a bear market, is actually figuring out how to prepare for a bull market. Like when all of a sudden, things are up 100x and you're cranking out $1,000 a week in cash flow, and you're like, oh shit, now I got to pay taxes. Oh, I probably should have prepared for this to occur and structured an entity to encapsulate assets for capital management purposes for in a strategic implementation. So I do remind folks that that kind of information is available on Discord, and it's up to folks to actually have an interest in wanting to do something a little bit better. And that's something I am cursed with. So I've certainly optimized to the fullest extent possible how to encapsulate all the shit we do in crypto in some sort of structural business entity. I don't know. Anywho, um, not much more to chat about on this relatively drab Wednesday. Markets looking at, oh, look at curve ripping to 7.5%. That's nice to see. Let's go in the 4 hour, get a little bit of granularity. Look at that candle. All right, let's see how well it does. Fortune favors the person that doesn't give a fuck and just lets the market do what it's going to do. I have no capacity to influence this market, and I'm just sitting back letting it play out. So when it's green, yay. When it's red, uh, looks pretty nice. At some point, all this stuff goes completely vertical. That's just the way it works because it's such a microscopic market accessible to all markets. So as soon as there's available liquidity in some sovereign market around the world, capital flows in chasing opportunity, especially when old opportunities dry up. As Raul mentioned earlier, when rate cuts start, old opportunities dry up, forcing capital reallocation. Joel said, "Will the Discord point me to the business structure material?" Yeah, I've had it on there for probably 6 months at this point. All my work on the trust and how it's structured, but it's very technical. It's the law, meaning we're literally talking about the CRF, Code of Federal Regulations. So it's to understand how to encapsulate capital. It's not just it's reading this, which is clearly a big document, but it's also stuff like no one reads this. Check this out. No one reads the rules. Nobody reads the rules. Where is it? I have so much shit in here. I don't even know where anything is anymore. Here. No one reads the rules. So this rule, which is an IRS rule, is this the rule? Yes. Document statistics. This page format changed a little bit. This rule from the IRS was released in September 4th of 2000. Oh, no, no, I'm sorry. This rule was released January 2nd, 2004. What year are we in? We're in 2024. September of 2024. This rule is 20, 20 and a half, 20 and three quarters years old. How many times has this document been viewed? Just viewed. 8,586 times in the last 20 years. Nobody reads the rules. And leave it to me being the captain to actually read the rules and be like, oh, this is the rules. This is how it works. Be like, all right, if you say so, it's just everything I built is based on the rules. Oh, this is a fascinating document unto itself. This document started out in 2001 as a pre-release document. So if what happens is, and the argument from a legal standpoint is, if you compare the 2001 document versus the 2004 document, you're like, oh, this was their conclusion. So this is what's your starting position, and you removed it in 2004. And some of the things they removed from the 2001 document in 2004 are like, yeah, I understand why you removed that because that's not going to fly. They couldn't, certain things, they couldn't use that language. Um, Let me see if I can find that real quick. No, I'm not going to find that background. CRF. Where was it? I need the 2001 version. It's the pre-release. Anyway, maybe I'll find that one day. Effective date on February here, 2001. Here's the proposed regulation. All right, I found it. Definition of income for trust purposes. This is, I remember it. At the same time, the limitations imposed by the proposed regulations ensure that the code provision relying on the definition of income are not undetermined by an unlimited ability of the trustee to allocate between income and principal. This shit doesn't exist in 2004. There's a reason it doesn't exist in 2004 because they don't have the authority to govern that. And then I went down the rabbit hole of federalism, and the Constitution, the 10th Amendment, literally protects federalism. It's not the IRS's authority. It's the state. It's the state statutes authority that governs limitations. They have no authority to govern it. Period. And then if you go back here, this was a very interesting statement. Here it is. So this sentence right here. Those requirements are a matter of local law and may differ from state to state. So this is basically, if you combine those two sentences, you're like, oh, I see what they did there. Those requirements are a matter of local law and may differ from state to state. The trustee must meet whatever requirements are imposed by local law on the exercise of this power. You have no power here. You just got to read the rules. So the fact that they removed that from the 2001 pre-release version, and this was their final version, is quite fascinating. So now it's like, all right, what state are you in? Now you got to pull up state statute. Before you know it, with the help of AI a bit, you got a 71-page document defining a whole lot of stuff. Anywho, if anyone has any questions about this shit, I'm more than happy to talk about it. Just literally, no one asks. Happens to be what I do in my spare time, and I find it quite fun. I kind of wish more people had interest in it, like bounce ideas. And I mean, I don't really have a network of attorneys to talk to, and frankly, I don't think they give a shit. Basically, they're hired to craft some piece of shit document for a client. They're not optimizing anything. They're not advocating for a client. You go to an estate planning attorney, you think they've done the research that I've done? Fuck no. You think they teach this in school to read these specific documents like this? Absolutely not. So I wish there was more of a network of persons that were taking it upon themselves to use the insane AI tooling that we have nowadays to literally digest and read not only documents like IRS rules and the CRF. Here's the CRF. This is literally straight from Congress. This is the CRF. This is the rules that the IRS builds their rules off of, the IRC as it's called. These are the rules of the rules. And then you could go into court cases. So you get your court cases. And that's called precedents. And that's called common law. And then you're able to build arguments and structure all this fancy stuff, all using AI. I have my window shared. I can't show you my chat. Yeah, I can show you my chat. I mean, just I've had endless conversations about this stuff to the point where I got so many rules in ChatGPT. It does so much work for you. So I built this rigorous scoring algorithm, which allows me to assess, flow, structure, semantic, reasoning, logic, um, depth of analysis, strength of precedents, comparing one precedent versus another. A precedent is, just a court case. And the beauty of the court cases, you know, the, we could say things as individuals, but there's a whole different thing when, check this out, 2.7. Ah, let's go to something a little bit more uh, palatable for just the conversation. 2.8. So this is dealing with federalism, and obviously all the quotes are highlighted, but powers not delegated to the United States by the Constitution, nor prohibited by it to the states, are reserved to the states, respectively, or the people. That is just such a powerful statement. I've grown fond of the language and the subtleties of language, which is called semantics. And very in 1918, in interpreting the Constitution, it must never be forgotten that the nation is made up of states to which are entrusted the powers of local government. And to them and to the people, the powers not expressly delegated to the national government are reserved. The power of the states to regulate this purely internal affairs by such laws as as seem wise to the local authority is inherent and has never been surrendered to the general government. So that's basically 10th Amendment written all over it. So basically, that's exactly why you see stuff like this. Here. That's exactly why this sentence is here instead of the other one. There is no authority to limit any authority granted by the states, specifically with regard to things that are state matters. And it just so happens that trust management is a state matter. There's very limited things that occur at the federal level. Those requirements are a matter of local law. That is just such an incredibly powerful quote. Why? It's literally in their rules. Their rules. So just follow the rules. And that's kind of what I did in creating my product. It's not a product for sale, it's for myself and my family. But I do talk about this on Discord. And you guys are welcome to the document. The document's on Discord, which has all of the appendix. And the appendix is just everything that I've built over the last years of everything that's useful, all the links, all the content, all the court cases, and all these appendix are referenced throughout the document that tell a whole story. It's very cryptocentric, traditional versus novelty. The type of investments described in section 16 um, establish a novel trust structure that enhances economic substance. The use of immutable deterministic software such as blockchain and smart contracts. This might be literally, yeah, that's correct sentence structure. This is literally probably the first like full-on crypto trust. That's pretty cool. Maybe I don't know. I'm not an attorney. That'd be great if I could make this a product. I mean, I wrote it for myself, and what estate attorneys do is they write this kind of shit for other people that pay them. It's just it's kind of just you got to have the checkbox of an attorney be able to sell legal products to other people, but Clearly, you could do legal work for yourself. So that might be an interesting product. That might be an interesting course. Like I showed you guys what I built with Cursor. So maybe I build a website that provides training on and obviously all the content, an aggregator of content and training on how to evaluate the content and analyses related to what estate attorneys do. Then folks could literally optimize the shit out of their own situation. 'Cause surely there's a situation in this damn country. Like literally, it's what Teddy said. Getting rid of the 1031. Kamala's plan for 40,000% capital gains tax and unrealized gains taxes. And okay, that's for person. Let's see what the law looks like for people. There's three categories. There's three categories of completely distinct law: people, corporations, private contracts. And there's completely different rules for all of them. So we'd have to look at the law and see what they come up with. But they have very little capacity to modify the private contracts because that shit dates back hundreds of years. Here's a cute quote. This is from Hale versus Henkel, 1908, 1906. Man, this just the law is just on the people's side, and that's what everyone forgot. Everyone's so afraid of the federal government. Ooh. Literally, the law is on your side. To top it all off, most state laws are on your side, unless you're in New York or California. Most state laws are protecting you against the federal government. That's the relationship that has emerged in our country, unfortunately. But fortunately, against the federal government, there's three branches. Mostly the executive, that's a bunch of dickbags, and but the judiciary, uh, there's complexities, but the judiciary has one thing going for them: they're a bunch of nerds, and they go on their power trips. But the judiciary still loves that legal shit. They wouldn't have done it otherwise. They love these words, and I could see why. These words are cool. They're very interesting, and the connection of words and the choice of words. I mean, literally, the choice of words has meaning. For instance, would you ever think that the difference between may and shall and will and stuff like required and must, those are massively different words. Semantics is a funny thing. Um, so yes, Joel, it will. What is happening in the macro when bull run starts? Probably some sort of collapse in one market or another, and a massive capital rotation um, from under from overpriced pig shit into stuff that has been underappreciated for a long time, and that's probably like domestic U.S. manufacturing, Dow Jones Industrial type stuff, commodities probably, which probably leads to consumer price inflation pressures. So that's generally what I think is happening. Rate cuts are going to cause a significant amount of volatility. If you go here and you see Fed money markets, retail money market fund, it is just up and to the right since 2020. A little bit of a dip down in 22, but it's the highest it's ever been, obviously. So as rate cuts happen, this changes how money markets need to operate. Maybe if they're not providing optimal returns, um, you might start to get significant withdrawals. So they might start to change around duration. So this is the season of the uninversion of the yield curve, where the short end, short duration, is paying less than the longer duration. So the money markets might shift over to the longer duration, which is the healthier structure of the market, but it's also going to cause a significant amount of volatility because when you have $1 trillion flow from the short end of the bond market, bills and bonds over to treasuries, duration, that changes the structure of the market. That's generally what's happening in the macro and bull run starts. Shit is popping off and a whole lot of volatility is going on. And capital is moving around fast with depth. So that's something that's kind of written in the cards. The volatility is coming and it's going to be weird because we don't know how it's going to manifest itself, but there's a lot of dollars out there. And these crypto markets have seen the fruits of those dollars cyclically over the last, you know, 8, 12 years, give or take. And I think that these businesses are going to be quite the recipient of capital flows when people get shaken out of their position. So that's basically what rate cuts do. It shakes people out of their position. Maybe a carry trade is no longer viable. Maybe a business is no longer viable and it gets liquidated. I mean, look at the commercial real estate. You got $200 million buildings being sold for $5 million and less. They're getting shaken out of their position. They're liquidating, and underperformance chases outperformance, and that's where we are starting. Hillis, good morning. Much a pleasure. DA advisors in the house. Hope you're good, my friend. Adam, listening from the car, but with your understanding of the rules now, do you see political commentary on increasing taxes or decreasing taxes as fugazi for people who don't understand the rules? Yeah, very interesting that you asked that. For the general public that is blue pilled and they're just go to work, paycheck on Friday, probably go to check cashing places. It's not fugazi. It's not a pretty situation. But then again, they don't really give a shit about capital gains because they don't do anything with regard to investments. So corporations, so this is going to change if they adjust those tax rates, as I've said, that'll affect businesses and corporations significantly. Um, Probably have a lot of capital flight of the billionaires, and but the real money, the big money, biggest money doesn't own their money. No one owns their money. The money has been encapsulated into an entity that is nobody. That's what a private contract is. So we need to see the rules, especially with regard to the unrealized gains. With regard to capital gains, they don't give a shit. Private contracts don't give a shit about capital gains necessarily. That'll just adjust. Like the way the rules work are, you have a lot of power to basically say when you're taxed. And great, okay, so when you're taxed, you pay that rate. And basically the core power or protection like a trust offers is reinforced and solidified, and the foundation is ethics and what is reasonable. And as long as your rules, your own personal rules in your contract are reasonable and respectful of the rules of the state and federal statute, then there's a lot of power of discretion. I actually got rid of a lot of discretion and I codified it all, so it's not really discretion. It's a whole nother conversation with regard to discretion. But I don't think I don't think they care much. For instance, I don't really care much. I don't engage in any capital gains. I just avoid it. But I like the income, of which there's a lot of powers with regard to what is income versus principal. So that's more or less another separate conversation. The big money doesn't give a shit. That's why the billionaires say, all right, great. So you're going to tax me more. What we fucking do? So the problem there is that we see from the general public perspective is that doesn't solve anything. Those fuckers in Congress spend too much. That's the problem. Greater taxes doesn't really fix anything. But then again, I'm not a Fed economist because certainly there's an imbalance with regard to supply and demand. But how much demand can you repress without impacting social civility? Because the repression, the financial repression of a person not being able to buy what they want or need certainly affects civility, and it increases frustration and anger. And clearly, we see that in broad daylight in the public, literally physical public, but also on like social media. And that is building, and it seems to be precipitating, percolating even. Um, Raul, your wife must love it when you go on these long talks. She's not home, but so sometimes she questions what I talk about. But I think it's my journal. I like talking to you guys. I wouldn't be talking to you guys today the way I talk to you guys today if I haven't talked to you guys like I have done over the past years. These conversations have produced the captain in his current form. So I appreciate that and thank you. Joel, with a 15K 4-year lock curve position, would that be considered a decent start for a beginner portfolio to create a livable retirement? So speculatively, so speculatively is something to be quite considerate of. Speculatively, which is not the strongest of statements. Like I often talk about X, Y, and Z. How much does it cost? How much is it paying? So, for instance, you get your baseline. The baseline is called APR. So if you go over here, and you go over here, I bet you it's down at 20% or less. And where's arrow? If you're still on, you'd be like, fuck, I bet you this says about 20% or less. Oh, I'm not connected. That'll do it. Oh, I'm not even logged in. That'll do it. 20%. Oh, arrow, my heart is breaking. I've been with Curve since it literally just Curve was at like 150%. Oh, 20%. That's very sad to see. Well, 20%. X, Y, and Z. How much does it cost? How much is it paying? How likely is it to continue to pay? That's the investor, that is the dividend investor's rule. So, for example, $100,000 at 20% is $20,000 a year salary. Is it likely to continue to pay that into the future, or is it likely to increase payments into the future? And that's the speculative component that I just mentioned with regard to your question. Livable retirement, unknown, speculatively, not impossible. For instance, Curve's at one hell of a market cap. Now, obviously, this is all speculative conversation. Oh my God, 343 market cap. Fully diluted is at 625? Oh, that's just wrong. Oh, that's just so grossly mispriced. Um, Speculatively, if what I think is correct with regard to foreign exchange, credit, and derivative products in an emerging market of emerging markets, accessible to all nation state emerging markets, but of no nation state emerging market, is as big as I think it is. It's just seems really big. Then these valuations are a crime. Valuations are criminal. Dollars for a product that has $1.925 billion worth of deposits? What kind of insanity is that? So project, project multiples. 15K goes 10x on the money and is producing 15% a year. 150K at 15% a year. So 10% is 15. 5% is 7.5. So you're talking about 20, $22,500 a year. So if Curve you buy Curve at the 15K position, it goes to 100 10x on the money, which is $2.08. I mean, these are reasonable things, which is quite an extraordinary thing to be able to say about crypto markets, because you're not saying these types of things in traditional finance. So just very speculative numbers, 10x on the money, and it's still cranking out 15%, $22,500 a year salary. So all of a sudden, you're getting more in revenue than your original investment because of the principal appreciation and the increase in business activity that is sustaining a relatively high rate of return. So that equation, 10x on the money, produces 150K position, retaining a 15% APR at that inflated market price will produce $22,500 a year in income, which would be an ROI of less than 1 year. So if next year is hot, to get an ROI of 1 year, that's insane. So ROI from a business standpoint is return on investment. How long does it take to get your money back? And 1 year from a business standpoint is absolutely insane. So um, I don't know, Joel. We all jump on a horse and ride off into the sunset. We all will have our stories to tell about the choices we've made, the decisions we made. And in the end, I like to think the most important thing is how well reasoned we were. So I've made, and I think about it a lot because it was one of my original investments, and it was a very large investment years ago, back at like 17. Bought a lot of this company called Nemaska Lithium, one of the most important lithium refineries in the Western Hemisphere. Still is to this day. Nothing has changed with the investment, except there was a hostile takeover from a private equity firm, and then it just got literally piecemealed and probably bought up by Livent at this point, which is one of the largest um, uh, big corps in the business. It was the right business. It just didn't work out. And that's the same with all investments. As long as it's the right investment, it was a good choice, then you will always be able to fall back on that reality. You invested in something that made sense, that was potentially something meaningful. And that's the way I like to think of a lot of these investments that I own. I have retained the things that are potentially very meaningful, that are significant banking products, fintech banking businesses. So then comes more complicated components to your self conversation, such as position size, portfolio composition, portfolio weighting, portfolio structure, which with a smaller portfolio is increasingly complicated. It actually gets easier the larger a portfolio is to judge position size because maybe you have income. Maybe you're generating X amount of income. So your portfolio is able to grow onto its own rather than from work. Because when you're working, we need that money in order to pay for standard of living. But when you're getting extra income from businesses, now you can make different choices with those additional revenue streams. So it gets easier the larger a business gets. The more capital you have, the easier it is to make more capital. That's what folks always say, right? Money makes money, which is the unfortunate truth. So that's exactly why Charlie Munger historically said the first 100,000 is the hardest, and you have to do whatever you have to do to get there. If it means a lot of cup of noodle, so be it. All right, that's not a health recommendation because that's pretty much almost a death sentence of eating cup of noodle only. So just don't do what I just said. But that's the hardest point because more capital you have, the more choices you have, the better structure you can have, and the better decisions you can make. So I don't have an answer, Joel. And that's maybe the best result that I offer on this stream. I don't have answers for those questions, but what I have is the conversation because what I've talked about over the last minutes is the conversation everyone really needs to have with themselves to think about these things in a structural way, in a way with a beginning, a start, and an end, with a timeline, a flow, a rhyme, and a reason, ultimately, rationality. Hope that helps, ladies and gentlemen. Wednesday, September 4th at 12:41 p.m. 139 people made it to the end of the stream in this drab and dreary, bearish state of the market. So I appreciate each and every one of you. Feel welcome to join Discord. It's there. Tremendous amount of legal information and veterans that have survived all the way back from 2020. So there's a lot of folks that have a lot of inside experience and very rational opinion. So it's always a great place to be. Uh, all that information is on my profile page on X. Uh, here's the stream and here's Discord. Can't miss it right at the top. So it's only Wednesday. I wish you all a wonderful day, and I will see you later this week. Peace.